Good morning and welcome to BPA's end of year quarterly business review for fiscal year 2025. I'm Joel Scruggs, BPA's Chief Communications Officer. We appreciate you making time for this public forum today. Before we get into the key content, I want to share a few reminders with you. First, today's webinar presentation is being recorded and will be uploaded in about a week to BPA's YouTube channel under the QBR playlist. The WebEx link is available on our bpa.gov event calendar. If you experience any trouble with WebEx, you can find the slide deck online at bpa.gov/QBR. That's bpa.gov/QBR. One other note, you may have noticed the first slide that we shared here today highlights the accessibility tools within WebEx. You can always familiarize yourself with those features and use them as needed. BPA uses webinar mode in WebEx for public-facing meetings and workshops. Although this mode has some restricted features, we do welcome your questions and engagement. You can submit questions at any time during the presentation, and we will respond to them at the end. To submit a question, click the green circle with the white S at the bottom of your screen to launch the Slido Q&A box, and your questions will be sent to the BPA host. If you think of a question after today's presentation has ended, you're welcome to email us directly at communications@bpa.gov. We also kindly encourage you to include your company or organization name in your WebEx display name. Identifying yourself helps all of us know who is participating in this forum, and you can even edit your display name by right-clicking over your attendee name within the participants list. This morning, we're joined by BPA's newly appointed Deputy Administrator and Chief Operating Officer, Suzanne Cooper. Suzanne is filling in for Administrator and CEO John Hairston, who had a conflict. She'll begin with an overview of BPA's end-of-year operational performance, and then our Executive Vice President and Chief Financial Officer, Tom McDonald, will summarize the agency's financial performance. Suzanne will then close out the main presentation with a recap of BPA's major FY2025 accomplishments and an update or a few updates on a few strategic initiatives. And then following that, I will highlight some upcoming public meetings, workshops, and processes. And then we'll wrap up with any questions that you may have. With that, I'll hand it over to Suzanne. Good morning, Suzanne.
Good morning. Thank you, Joel. Welcome, everybody. I'm happy to be with you today to share BPA's end-of-year results. Let's start with a look at our core operations on slide 6. BPA met all but one of our agency level targets. Tom will walk us through the finance metrics, but I want to point out a few highlights of our safety and reliability targets. Our safety performance for FY25 held steady, with the incident frequency rate right at our ceiling. While that shows our controls are holding, it also reminds us how important it is to keep learning and improving. One of the most tangible steps we took this year was completing the full revision of our incident assessment process. This improvement gives us a stronger, more consistent way to identify root causes and contributing factors behind every event. Those insights directly feed our effort to enact targeted mitigation actions and continuously reduce the injury frequency rate and ultimately protect our workforce. We're also expanding proactive data collection, like vehicle operational data from our GSA fleet, to pinpoint at-risk behaviors such as speeding or driving without a seatbelt. And our workforce continues to lead by example. Safety corrective actions came in well above target, proving that when people see something and say something, we do something to correct it. Transmission reliability is another area in which we excelled. In fact, transmission recorded the lowest number of unplanned line outages in 40 years. And we met all 4 metrics for the frequency and duration of unplanned outages. The one target we did not meet is the forced outage factor for federal hydropower, which ended the year at 8.9%. While this is above our target for unplanned outages, it is an improvement over FY24, which ended the year at 9.8%. In addition to the unresolved outages from Q3, the main drivers for missing this target were an extended outage at Grand Coulee's Unit G19 and a new outage of John Day's Unit 8. Staffing issues at the U.S. Army Corps of Engineers and Bureau of Reclamation are impacting this target, along with long lead times for materials. Until the hiring needs of our federal generating partners can be met, the federal system will likely continue to experience longer unit outages compared to the return to service times under previous staffing levels that were experienced. I would like to note, however, that our Fed Hydro Capital Program continues to grow, and we are making significant investments to improve the reliability, efficiency, and capacity of the Federal Columbia River Power System. Tom is going to share more about our capital execution a bit later. But before I hand it over to Tom, I want to point out that we met all the financial metrics set at the start of the year. This is especially notable given the very challenging water conditions we experienced for the third year in a row. However, the cumulative effect of this multi-year trend in water supply is showing up in our end-of-year financial reserves for risk. I'm now going to hand it over to Tom to walk us through the details.
Thank you, Suzanne, and good morning. It's a pleasure to be with you all today for the end-of-year business review. As Suzanne reported, despite difficult hydrological conditions, BPA met its key performance indicators this year. The well below average water supply, however, tested our financial risk mechanisms. We achieved agency net revenues of $74 million, $4 million above target. However, agency net revenues were $211 million below the assumption included in rates and $710 million below the BP24 two-year rate period. This shortfall resulted mainly from the elevated power purchases caused by below average runoff. These dry conditions drove higher than expected power purchase expenses, causing the agency to dip into financial reserves. Regarding agency IPR cost expenditures, we are pleased to report a total of $2,196 million for fiscal year 25. This figure is $36 million below the target of $2,232 million. Fiscal year 25 marks a record high for agency direct capital expenditures at $1,079 million, falling within the target range of $983 million and $1,256 million, and exceeding the midpoint execution targets primarily driven by strong execution on several large projects. Our agency days cash on hand stood at 64 days at the close of fiscal year 25, a reduction of 52 days from the previous year's 116 days, primarily due to the decline in net revenue. While the agency as a whole exceeded the 60-day target, Power Services days cash on hand fell below this threshold. Our financial leverage demonstrated a favorable trajectory this year, with the debt to asset ratio concluding at 79.6%. This marks a 0.7 of a percentage point reduction from 80.3% at the end of fiscal year 24, reflecting the progress we've made in optimizing our assets and liability structure. We are also green on our borrowing authority KPI, which tracks our available U.S. Treasury borrowing authority over a rolling 20-year period. Borrowing authority is a critical access to capital tool. As noted at the fiscal year 25 Q3 QBR technical workshop, we are reporting this KPI as green, but this assumes the use of additional access to capital tools. The Transmission Capital Expansion Program necessitates the use of capital financing tools other than borrowing authority to prevent borrowing authority constraints over the long-term 20-year horizon. Let's turn now to slide 9. We'll look at the details specific to the power business line. Overall, power net revenues came in at $59 million, which is $18 million below the KPI target of $77 million. It was another challenging water year for power, the third in a row, which is reflected in both power's net revenues and end-of-year reserve for risk actuals. Starting with the blue bar on the left, we see net revenue target of $77 million. Moving to the second bar, Power's operating revenue came in at $210 million above target, largely driven by higher trading floor sales and 4H10C credits for fish mitigation activities. Both increases are mainly driven by higher power prices than forecast in the net revenue target. Please note that the higher trading floor sales were entirely offset by higher power purchases that are reflected in bar 4. Net secondary revenue came in at $67 million compared to the $229 million target and $162 million decrease. This result is also significantly lower than the rate case expectations of $368 million. Moving on to the third bar, IPR expenses came in at $37 million, less than the target. The reduction is mainly due to under execution on carryover for fish and wildlife agreements and conservation purchases. Also, renewables spend was below target due to lower wind output than the contract max amount. In the fourth bar, non-IPR expenses came in at $265 million above the KPI target, mainly due to increased power purchases resulting from dry conditions. The biggest increase in megawatts purchased was seen in January and February. The January through July observed volume at the Dalles Dam was 81.4 million acre feet, which is 78.5% of the 30-year normal from 1991 to 2020. These purchases were partially offset by a federal debt management transaction that we mentioned during the second quarter QBR, without which non-IPR expenses would be $166 million worse than shown here. Moving on to the last bar, Power's end of year net revenue is $59 million, which is $18 million below the KPI target. Also, an important note for our slice customers, the slice true-up is a credit of $28.3 million, primarily due to the debt management transaction and increased U.S. Treasury credits. Moving to transmission on slide 10, overall transmission ended the year with net revenues of $15 million, which is a $22 million improvement from the KPI target. Starting with the blue bar on the left, transmission's KPI target was negative $7 million. Moving to the second bar, transmission's operating revenues are $24 million above the target. This is mainly driven by increased Southern Intertie short-term revenues resulting from increased wheeling due to favorable market prices, as well as increased revenue from reimbursable projects. The third bar, transmission's IPR expenses, came in $350,000 above target, which is about as close as you can get on our nearly $680 million budget. This $0.4 million delta is driven by higher than forecast capital to expense transfers that resulted in higher expenses in Q4. Looking at the fourth bar, transmission's non-IPR expenses are $2 million above the target, due to an increase in depreciation expense, reimbursable projects, and EIM entity scheduling coordinator settlement charges. This was slightly offset by the debt management transaction, which resulted in a gain of approximately $69 million. To sum it all up, transmission's end of year net revenue is $15 million, which is $22 million above the KPI target. Let's now turn to financial reserves on slide 11. While the agency's overall financial performance was strong, the dry conditions we navigated this year, as well as the prior 2 years, have impacted liquidity. The agency's financial reserves for risk ended the year at $489 million. Specifically, Power's reserves for risk ended the year at $270 million, a $238 million decrease from the prior year. This placed Power's fiscal year 2025 end-of-year reserves below our financial reserves policy lower threshold, triggering the full $40 million surcharge. Conversely, transmission's reserves ended the year at $220 million. While this is a $96 million decrease from the prior year, this level positions transmission comfortably between its reserves distribution clause and surcharge thresholds, meaning no action was triggered for transmission this year. Our financial reserves policy employs a days cash on hand metric, targeting each business unit to maintain reserves between 60 and 120 days of cash. For fiscal year 2025, the agency ended the year at 64 days, with Power at 50 days and transmission at 94 days. The financial reserves policy surcharge triggers if a business unit's reserves for risk fall below a cash-based threshold of 60 days, which equates to $370 million for Power and $141 million for transmission. Again, because Power reserves are below the 60-day threshold, the FRP surcharge is activated for the full $40 million. I want to emphasize that BPA proactively deployed various liquidity management tools to counter the impact of lower than anticipated net revenues and stream flows. Our actions included strategic debt management, foregoing planned revenue financing, and preserving RDC funds for liquidity. Without these measures, our liquidity position would have been significantly worse. At the QBR technical workshop this afternoon, we will dive into the calculation, rate impacts, and timeline for the power surcharge. Turning to our capital program on slide 12, you can see that the agency met its midpoint target within 2%. The blue bar on the left is the KPI midpoint target of $1,092 million for capital expenditures. The upper and lower dashed gray lines are the target execution range for our total direct capital investment of +15% and -10% of the midpoint target. We will start with Fed Hydro, which had an increase of $17.8 million above the midpoint target due to stronger than anticipated execution. Several large projects are underway, including McNary turbine design and replacement, John Day turbine runners and generator rewinds, to name a couple. The U.S. Army Corps of Engineers is executing especially well, while the Bureau of Reclamation is struggling with personnel shortages. Contracted work underway on several very large projects like those named are contributing to the high execution. Next, we have transmission, which executed $2.2 million below and within 1% of the midpoint target. It is important to note that this includes a mid-year reset of the target due to impacts resulting from executive orders and the voluntary early retirement and deferred resignation programs. This resulted in 4 weeks of contract pauses, lost project managers, impacts to environment, realty, and supply chain support, and delays due to the NEPA pause. Despite this, transmission was able to finish the year strong, exceeding the fiscal year 24 total. Major investments included the newly constructed Longhorn substation, the Pearl Sherwood McLaughlin transmission line upgrade, south of Tri-Cities and Carlton projects, as well as significant investments in our SUSTAIN program, particularly in critical infrastructure projects. Moving to the right, enterprise services, which includes facilities, fleet, IT, and security asset categories, ended the year $5.4 million below the midpoint target. The main driver of this decrease was the cancellation of an IT project, which resulted in the transfer of capital expenditures to expense. However, this was mostly offset by the Vancouver Control Center project within the facilities asset category. This project is currently ahead of schedule, which brought costs forward from fiscal year 26. Moving to environment, fish, and wildlife, you will see actuals at $23.2 million below the midpoint target. This is primarily due to delays in hatchery and passage projects, including the John Day and Trinity hatcheries, the Grand Ronde Model Watershed project resulting from BPA staffing shortages, weather delays, and issues accessing remote construction sites early in the season. Additionally, land purchases in the Willamette Valley are slower than expected, driven by boundary line and access issues. Finally, we'll move to the blue bar on the far right, which represents the agency end of year actuals of $1,079 million. This is about $13 million below and within 2% of the target midpoint within the acceptable range. More details on our capital expenditures will be shared at the QBR technical workshop later today. And finally, before we move on, I'd like to highlight that on September 30, BPA made its 42nd consecutive payment to the U.S. Treasury in full and on time. This year's payment totaled $1.2 billion, which included $885 million of principal and $259 million of interest. Looking ahead to 2026, BPA will initiate a review of our financial plan. This undertaking is designed to enhance risk mitigation strategies and ensure alignment with our strategic objectives, drawing valuable insights from our experience managing financial resilience through 3 consecutive poor water years. This concludes the financial report. Thank you all for your time. I'll turn it back over to you, Suzanne.
All right, thank you, Tom. I'd like to share some fiscal year agency accomplishments and provide an update on a few of BPA's strategic initiatives. So we're going to go to the next slide, 14. Power services made the most of the challenging water year. Our highly skilled staff applied their expertise to maximize the flexible operations of the hydropower system, meeting peak loads and serving our customers in the most economical way. As Tom noted, we also made significant investments in the reliability, efficiency, and capacity of the hydropower system. We continue to grow our Fed Hydro Capital program, which includes a portfolio of projects with a potential capacity increase of more than 800 megawatts over the next 20 years. BPA's energy conservation program is further maximizing the value of the FCRPS. In partnership with our utility customers, we achieved nearly 59 average megawatts of energy savings in FY2025. Since the passage of the 1980 Northwest Power Act, BPA has acquired 2,593 average megawatts of energy savings, enough energy to fuel 1.9 million homes for a year. Our cumulative investments in conservation deliver an estimated $2.3 billion in annual ratepayer savings. I'm also happy to share that after many years of effort, we are on track to execute all long-term provider of choice power sales contracts by the end of December. This accomplishment would be hard to overstate. The long-term certainty provided by these contracts will support regional economic stability and help ensure a more reliable and affordable power supply for our customers and the region for nearly another 2 decades. We deeply appreciate the regional collaboration and consistent engagement of our customers to bring this effort to a successful conclusion. It's been a long haul. Everyone's done a fabulous job with this. Let's move on to transmission. At the top of the meeting, I shared that transmission services recorded the fewest number of unplanned line outages in 40 years. Our teams have been working hard to implement new methods and technology, like the use of drones, to help crews safely complete more maintenance and repair work in less time. The continued implementation of our wildfire mitigation plan further supported BPA's reliability in FY2025. Our strategy includes annual aerial and ground inspections of all 15,000 circuit miles of transmission line. We also implement an industry-leading vegetation management program to ensure our rights-of-way are cleared of potential wildfire fuel. Wildland fires burned more than 350,000 acres of BPA service territory in fiscal year 25. Our crews responded to dozens of fire-related outages, some of which were due to smoke and others were taken to aid safe firefighting efforts. While we have a public safety power shutoff procedure to proactively de-energize lines under certain conditions, we did not need to take any PSPS outages in 2025. From a regional standpoint, BPA continues to lead in the development of the Western Resource Adequacy Program. This program represents a collective commitment by entities across the region to address our shared reliability challenges. BPA and 15 other program participants recently committed to moving forward with binding operations in winter 2027-28. BPA continues to see the near and long-term value of the Western Power Pool's Resource Adequacy Program, which remains one of the largest such programs in the country. While a few utilities opted to exit the program, WRAP remains viable and continues to provide critical tools and resources to help address current and future reliability challenges. As BPA works to make the grid more reliable, we're also expanding the grid to accommodate new generation and growing power demand. Over the last year, we continued to advance a $5 billion portfolio of high voltage transmission investment. Combined, these 23 projects would add more than 6,000 megawatts of transmission capacity to meet future energy needs. These projects are expected to be completed by 2035. When including other planned projects designed to sustain our existing assets, BPA's total projected grid investment for the next 10 years is approximately $15 billion. For FY25, we had a record high year for our capital program, with transmission deploying more than $773 million in capital. And now we are looking to build faster. We launched the Grid Access Transformation Project to redesign and streamline our long-term transmission planning processes. This will allow us to more quickly and efficiently move projects forward. As part of this effort, we recently announced a new tariff process, TC27, so that we can accelerate the development of plans of service and the transmission projects to meet customer needs. We are also benefiting from the work done in recent years to modify our large generator interconnection process. We moved to a first ready, first served approach that will improve interconnection queue processing and address backlog. We plan to complete our first generator interconnection cluster study in January of 2026. This cluster study represents 167 customer requests and more than 61 gigawatts of generation. In addition, when we transitioned to the new GI process, we were able to fast track a large number of late-stage projects. We expect to enable 20 gigawatts of new generation by 2030 with those projects. Another development in 2025 was BPA's announcement to pursue participation in Markets Plus, a day-ahead market offered by the Southwest Power Pool. After years of rigorous analysis and public engagement, we determined Markets Plus is BPA's best option for maintaining competitive power transmission rates over the long term. It was also the direction that best meets our long-term strategic business interest and is consistent with our statutory mission. Joining a day-ahead market will optimize the use of our existing transmission and generating assets, as well as give us accurate data regarding our capacity needs, which we expect will help inform future investments. BPA is targeting October 2028 for our entrance into Markets Plus. We're currently working with an integrator to establish a timeline and detailed plan of work to enable participation. We plan to share a status update at our next day-ahead market public meeting, which is on December 4th. Encourage folks to join in for that. Now, FY25 was a very busy and productive year. As I hope you gathered from the updates shared today, Bonneville's workforce delivered tremendous value to our customers and the region, despite workforce losses experienced in the spring. And now we are taking steps to further strengthen our strategy execution going forward. First, we resumed hiring in September after receiving authority to fill our most critical positions. We now have approval to fill 155 positions, and to date we have posted 122 announcements, some of which we are hiring multiple positions under. The response has been overwhelming. So far, we've received more than 3,450 applications, and we've made 49 selections. We are ecstatic about the level of interest, especially for positions that are typically difficult to fill. In addition to hiring, we are adopting some changes to our organizational structure. These refinements will align key functions and ensure we are best positioned to meet customer needs and achieve our strategic priorities. You can find our latest organizational chart on bpa.gov. One change I'll note is the creation of a new senior executive position, the Executive Vice President of Business Management and Development. The establishment of this position ensures a single leader oversees our major cross-agency initiatives, such as markets implementation. The changes we're making support sound decision-making, communication, and collaboration so that we can execute our priorities in the most efficient manner. These refinements to our organizational structure become effective November 16th. Thank you for taking the time to tune in for our end-of-year QBR. Please keep an eye out for BPA's annual report for more details about what we delivered in 2025. This report is going to be published tomorrow. With that, I'm going to hand it back to Joel Grubb.
All right, thank you, Suzanne and Tom. Now I'm going to highlight upcoming meetings, workshops, processes, and comment periods, and I'll close out with your questions. As a reminder, our meetings and workshops are listed on the event calendar on bpa.gov, which you can find when you navigate to the Learn and Participate tab. Here are a few highlights from our event calendar through December. As mentioned, we're hosting the QBR Technical Workshop this afternoon from 1 to 3 p.m. We encourage you to participate in this workshop where our exceptional finance team will provide additional information on some of the topics discussed today, including the FY2025 reserves for risk results, which resulted in the triggering of the power surcharge. There will also be agency updates about Fed hydro and transmission capital metrics, a check-in on phase 2 of the Regional Cooperation Debt Program, and updates about the Western Resource Adequacy Program. You can find more info about the QBR Technical Workshop on our QBR webpage at bpa.gov/QBR. Please note the residential exchange program content for the workshop previously scheduled for November 20th has been moved to December 3rd. And then, as Suzanne mentioned a moment ago, on December 4th, BPA is hosting another day-ahead market participation workshop. The agenda for this workshop is still tentative, but we expect to share an update on the Markets Plus participation and Southwest Power Pool's phase 2 work stream, the factors influencing our go-live timing, as well as an EDAM updates. Next month, on December 15th, BPA's Transmission Services will host the second pre-proceeding workshop for the BP26E mini rate case. This mini rate case is to address the necessary updates to the 2026 transmission, ancillary, and control area services rate schedules and general rate schedule provisions to implement CAISO's extended day-ahead market. Although BPA is not entering EDAM, several updates to the market operator tariff are scheduled to take effect, driving BPA to do the same. For BPA to retain the ability to sub-allocate the charge codes under the current methodology, these administrative updates must be made. Also in December, BPA is launching a Grid Access Transformation Future State Workshop Series. In these meetings, Transmission Services will discuss proactive planning and solutions to accelerate expansion. This first workshop will focus on timeline, vision, and definition. Any comments, clarifications, or questions about this future state workshop series can be submitted to techforum@bpa.gov, the subject line Grid Access Transformation. Finally, to close out the calendar year, there is a series of pre-proceeding workshops for TC27. This workshop series started in October and will continue through February of 2026. The purpose is to continue the grid access transformation discussion on proposed changes to BPA's processes for evaluating and the Federal Columbia River Transmission System. After the workshops, we intend to conduct a TC27 proceeding to set and or modify the terms and conditions of BPA's open access transmission tariff, specifically related to the proposed changes that are developed through the pre-proceeding workshop process. All right, on to the next slide. I want to make you aware of several public comment periods, both formal through our public comment portal and informal through the tech forum email inbox. An informal public comment period led by Transmission Services about the BP26E rate case will close on Friday, November 21st. This comment period provides our customers and stakeholders the opportunity to comment on the materials, plan, and timeline for the mini rate case. We're interested in hearing from our customers, specifically about sub-allocating the new codes. And as I mentioned a moment ago, we will be hosting a second pre-procedural workshop on December 15th. Then on November 10th, BPA opened a formal public comment period on the FY26 Power Reserves Policy Surcharge. As Tom and Suzanne mentioned earlier, BPA has met the conditions to trigger a $40 million surcharge for power customers based on power reserves for risk levels at the end of FY25. This public comment period provides customers with the opportunity to comment on the preliminary data. This comment period on the surcharge closes on Friday, November 21st. And finally, we have an upcoming public comment period on cost verification for the FY2025 flight true-up adjustment charge. This is an annual public process developed under the tiered rate methodology that permits flight customers and other BPA customers and interested parties to review the data and to assess whether BPA has correctly calculated the amount of each expense or revenue credit subject to the flight true-up adjustment. This comment period closes on Wednesday, December 10th. And as a reminder, you can access the public comment portal by navigating to the comment page on our website at www.bpa.gov/comment at bpa.gov/comment. All right, that concludes our presentation for today. We'll now move into a brief Q&A session. To ask a question, please submit it through Q&A field in WebEx or raise your hand to be unmuted. Looks like we've had at least one question come in.
Yes, thank you, Joel. We have received one question into the Slido Q&A chat box from the city of Blaine. Thank you for your question. I'll read it out loud and then ask our CFO, Tom, to please answer. With revenue strength greater than anticipated, how come there is a power surcharge being billed back to customers?
Very good. Thank you for the question. So we did experience stronger than anticipated revenues, as noted, but the corollary to that was we also experienced much stronger than anticipated power purchase expense due to the dry conditions that more than offset the increase in revenues. I hope that answers the question. If not, there'll be more details at the technical workshop later this afternoon. Thanks.
Okay, thank you, Tom, for fielding that question. Any others? This is where we need some background music while we wait. Let's see. There's another question.
Nothing yet in the chat. Attendees are also welcome to raise their hand. Oh, I see Ryan from WPAG has his hand raised. Ryan, I've gone ahead and unmuted you. Please ask your question.
Yeah, thank you. This is Ryan Neal from WPAG. And apologies if you already answered this, but just looking back at the materials from the third quarter business review, it looked like at that time there was only a 7% chance of a surcharge, and clearly we now have a surcharge. What's happened in the last 3 months that we're now from a situation where it was a 7% risk to the full $40 million surcharge?
I can take that. This is Tom. So that is correct. It was a lower risk than anticipated at the third quarter. Unfortunately, again, power purchases came in very hot. There's always also a greater band of uncertainty around reserves, and because they're related to cash outlays, and we had quite a few cash outlays that came in very hot at the end of the year from prior year accruals. So there was, for example, prior year fish accruals that were on the books for quite a while that came in hot at the end of the fourth quarter. So a few things that we just didn't see coming in terms of cash outlays that really affected the reserves for risk calculation at the end of the year. So again, that's not a lot of detail. There'll be more details at the technical workshop, I'm sure. So encourage you to attend and ask questions there as well. Thanks.
Thank you.
Thanks, Tom. It looks like we have another raised hand. This attendee, it looks like, is on the phone, phone number 2084, ending in 09.
Okay, you got me on the phone now? Can you
Yes.
hear me? Okay, great.
Yes,
That
go
was a
ahead.
little tricky. Yeah, this is Scott Levy with bluefish.org. Thanks for the update here at the QBR. Um, I heard the words reliable, affordable, and I'm curious to know how how Bonneville interfaces with the Department of Justice, or is it strictly the Army Corps of Engineers, the injunctive relief that's being sought regarding the EIS, the CRSO EIS. The injunctive relief is going to be quite painful, even with the 3 years of dry years. Wondering if Bonneville interfaces with the Justice Department, or does Bonneville just have to take what it's given from the Army Corps?
I'll take that one. So we don't comment on active litigation. We are involved in the litigation. I can say that.
Okay, that
Thank
answers the
you.
question. Yeah, thanks.
Well, and as a federal government agency, the Department of Justice does represent us in these kind of legal
Yeah, but I just wanted to make
cases.
sure that you guys could weigh in with the justice. I wasn't quite certain on that, and some people have asked me that question, so I appreciate your answer. Thank you.
All right. Any additional question?
We do have one more additional question from Amy in the chat. Thank you. I'll go ahead and read it out loud. There was a big change from the Q3 projection for the financial reserves for risk. What was the biggest driver for that change? This is probably the same question that WAPAG had.
Yeah, it was basically the same question, I think, but it's a similar answer to what I gave earlier. So again, we did have power purchases that came in hot. We also again saw some cash outlays due to prior year accruals. I would say that was probably the biggest driver besides the power purchases. So again, I encourage you to attend the technical workshop and hear more details there. Thanks.
Yes, the upcoming QBR technical workshop at 1 p.m. will be another great source of information where staff can dive into a little bit more detail, which will be great. I see another question in the chat from Amy. Has BPA considered publishing financial metrics on a more frequent basis than quarterly?
I'll walk through.
Yeah, no, I don't think we've contemplated doing anything differently than the quarterly reporting.
Here, I'll carry your bag, honey. You let your bag down.
Well, I'm just gonna be by the cars.
Can we ask that speaker 208 please mute themselves? Thank you. Sorry for interrupting you, Joel.
Yeah, I was just saying that I don't think we have any intention to move away from the quarterly financial reporting. I think it just speaks to, the variables in play, the uncertainty, the volatility that moved from where we thought we were headed back in Q3 to what we experienced as we closed out Q4. Okay. Do we have any more questions?
Nope, it looks like everything has been addressed. Thank you.
All right. And we'll conclude this morning's presentation. Again, if you do have a question later or would prefer to submit it, in writing via email, you can email us at communications@bpa.gov. We also look forward to fielding more of your questions at the QBR technical workshop this afternoon, which begins at 1 p.m. And then please note we will be posting responses to questions on the QBR webpage in the coming weeks, along with a recording and a transcript of today's meeting. Furthermore, if you have a topic that you think warrants further discussion, you can reach out to us and send us an email at communication@bpa.gov, and we look at the best way for providing you that information. And it would also greatly aid us with the production of future QBR forums if you could take a moment to complete our post-event feedback survey. I think we're including it in the chat box. I'll also be emailing it out to attendees. To wrap things up, we really appreciate you joining us today. Our next quarterly business review will be on Thursday, February 12th, when we'll be presenting the agency's performance results from the first quarter of FY2026. And as we close, on behalf of all of us at BPA, I would like to extend a heartfelt appreciation to our military veterans for their service, sacrifices, and courage in defending our country and protecting American values and interests. Thank you for your service to our nation. And with that, we hope that all of you, your coworkers, and families have a happy, healthy, and safe holiday season. We will be back in February for the next QBR. That's it for today. Thank you.